Alright, welcome to episode 20 of the ICT Mastery Mentorship. In this episode, we're going to be going over lore behind price, okay? Now, these next three episodes, 20, which is this episode, 21 and 22, are going to be the end of chapter lessons, which I think I told you or teased about in episode 19, time and price. Okay, if you want to see those again, it's, let's scroll up here. I'm teasing everything. Oh my god, chapter 2, I'm leaking everything, but here it is. So, as you see this little separation, this little line here, this is everything you've learned before, okay? And these three right here is what's going to like clarify and put all this together so you can really understand and use it, okay? And really start or begin to understand the market and take trades. So this is everything you learned. This is what's going to summarize all this right here. Lower behind price, which is what we're going to go over in a couple seconds. Not a couple seconds, maybe in a minute. Top-down analysis, daily bias, and then time frame mastery, understanding how the time frames work. Okay, so these are your end of chapter lessons, as I will, list that in the title. They will say end of chapter. So you won't know, like, okay, another episode. This is the end of chapter lessons. So you understand that you have to watch all this first, and then you summarize everything right along there, okay? And also the other chapters have it too. Each chapter has different end of chapter lessons, okay? Such as chapter 2. You want to see it? Yes. Select your concepts, institutional order flow, and anticipatory skill development. But anyways, enough of me talking about that. Let's go into lower behind price, okay? So lower behind price is simply just understanding price action, okay? And that's literally the simplest way I can say it, okay? It's simply understanding price and what's actually going on with it. Now, how do you do that, okay? You basically put everything together. It's the same thing as top-down analysis or getting daily bias, but I'm basically teaching you to look at the market in I guess you can say a deeper perspective, a more in-depth perspective, instead of just saying, oh, there's a fair value gap and now it's going to go down. No, you have to really look, see why is it going to the fair value gap. To make it easier for you, I ask myself three things. Okay, I ask myself when, where, and why. Okay, where is like where is it a premium? Is it a premium discount? Like where are we right now? Why are we doing this? Okay, and then what is it that we are exactly doing? Okay. So I haven't really created that exact blueprint myself to say what, when, where, why. But I am like in the future and in the next couple of concepts, but I just thought of that now. But it's basically like a what, when, where, why, like understanding, questioning the market. Okay. Anyways, enough of me yapping about what, when, where, why, and all that. Let's actually go into the euro dollar, and we're going to be analyzing this gigantic bearish move here, okay? This gigantic move here. We're going to be looking at it and looking at why it happened, okay? But first of all, what do we got to do? We got to see the lore behind price. And if you don't know what lore is, I'll search up what lore is, okay? Lore definition, okay? Background information about a person, okay? Not exactly a person though. It can be anything, but it's simply background information, or basically old information, okay? So when you hear somebody say lore, like about the game or literally about anything, this is what it means. Lore basically means background information about something, okay? In that background information is about the market, is about euro dollars price action on the weekly. That's what the background information is. So we're looking to see how this move happened, okay? And yes, we're in hindsight. You can't say, oh, he's in hindsight. We can't look like this. Don't we have to go in live markets? No, duh. Okay. Literally, obviously. But anyways, enough of me doing that. Let's actually go into it. So this move here, we can see that it was clearly very, very bearish. But we're going to look here, and we're really going to look into why that happened. Okay, so first things first, okay, we can see that price was, purging highs, high broken again. Okay, now I will say something here. Okay, if, for example, if price is consistently breaking highs, okay, that's institutional order flow. I'll just say that here, a little teaser. Institutional order flow is basically when price is clearly hitting high. It's respecting fair value gap, bullish fair value gap, it's respecting bullish order blocks. It's having bullish institutional order flow. Institutional order flow is basically what is going on institution. Like, are we respecting fair value gap? Are we literally going? Like, are we literally moving in one direction, like to where it's like no doubt about it? That's what institutional order flow. You'll learn that more in the next chapter, but I'll just give you a little teaser so you understand it, okay? But one of those confluences is that we came up to the high, broke it, came down again, broke it, and then we came and break the low. Okay. Once we see that, we can expect price to no longer go any higher because as we can see, when we were heading higher, see this high broken right there, high broken again, and then we came back down, we broke this low, and did we ever go back above that high? That last high created, before we broke this low? No, it never came back to it. So this is the initial shift. This right here was the initial shift in market structure right there. That was the initial shift. But enough of that. So we see this little shift in the market because we come down below this low after continuously taking a highs, one high, two high, and three high. Okay. We come down, breaking this low, all the way down into these three lows here. Okay, or down to this low, creating a what? A liquidity purge. Okay. That liquidity purge is going to send the market higher, but send the market higher in what reasoning? Okay, remember this is lower behind price, not just oh it came down and it might go higher. We're really looking to see what is happening. So we came down, created a liquidity purge. Okay, then we had a market structure shift here. Okay, market structure shift right here. Then we still have the rest of this fair value gap. Okay, we're going to keep this fair value gap in mind right along here. If I can even get it. My mouse doesn't bug out. There we go. So we have the rest of that fair value gap right there. But okay. We came down into liquidity, purging it. Okay. It confirms this by just look at the way the candles are acting. Do we ever try to push below it? Nope. Do we ever like really say let's just push through it? No. We came down, right back up. Tried to go lower, came back up. Up, up, and then we just completely rejected against this low. Confirming a liquidity purge has occurred right along there. Okay. So you return back up into this fair value gap, and then we consolidate, okay? We consolidate, consolidate, consolidate. But why do we consolidate? We're consolidating lower into this range here. From this low to this high, that this is our current dealing range. If, for example, none of that price action there existed, this is our current dealing range that we're dealing in, that we're trading in, okay? Price slowly, slowly, slowly trends lower into a discount, okay? To then do what? To then go higher back into this high. Doing what? I think it's a liquidity pods. Yup, it's a liquidity pods. Okay. Do we have any eagerness to go higher? Do we have any willingness to go higher past this high? Nope. No, we do not, because we can see came up, come down, try to come up again, straight back in. Nope. But you're probably like, oh, this is all in hindsight. Now, seeing this live, okay, I wouldn't say it's hard, but it's literally the same. Okay. All you're seeing is just the I guess you could say the aftermath, what happened live. Okay, this is all that is. It's literally the same exact thing, but you're just looking at it printed. Okay, you're just looking at it on a piece of paper instead of it being printed. Okay, you're looking at it on a piece of paper instead of it being printed on a piece of paper. Okay, so this right here is it being printed on a piece of paper. Okay, live actual movements up and down is it being printed on the paper. Okay, it's printing it on the paper. Okay. But we're just looking at the printed version. We're just looking at we're just looking at the document. We're not looking at the creation of the document, okay? So get that out of the way. So we drop lower into a discount, okay? And then we also had a market structure shift telling us that we want to go higher or a break in market structure. Okay. Did I select it? Did I select it? Wait. There we go. Now I selected it. Okay. So we had a break in market structure indicating that we want to go higher. Well, go higher for what reason? Okay. We want to go higher because we want to come into this point of liquidity and then reach a premium of this range here. Okay, if I draw a range from here to here, we want to come into a premium of this range back here before we drop lower, taking out this low. Okay, so we're going to draw this low out because this could be a potential liquidity target. So we can set this as sell side liquidity. There we go. Because as we can clearly see, price is shifting. Okay, just from looking at this liquidity purge, and then as we come into a very very deep premium of this range here, okay, we can see that we want to go lower. Okay, but now we're gonna explain all this so we can put it all together. Okay, so we had a liquidity purge here. Okay, now we want to really look for a true indication that we want to go high. Okay, This confirms the liquidity purge because look what happens down here. We don't push past it, okay? We then come up, displacing past this swing high here, creating a break of market structure to go higher, okay? But to go higher in what reason, okay? To come above this high and then drop, okay? Because remember, before price goes anywhere, it has to do what? It has to purge liquidity. It has to. It literally has to, okay? So we come above the high, right? Then we start trending lower, but trending lower to do what? Okay, we trend lower to come into a discount of this range here, of this current range, if you can see it, to come into a discount of this range here, to then go higher and purge liquidity before going lower. Okay, how is this liquidity purge? Look, it confirmed it. It was hesitating to push past it. Okay, and then we also went higher from this discounted range here of this range here to go into a premium of this range here, right up here, okay, to come into a premium up here. So you can see how everything is correlated. Like if you think of it this way, it's like the market has a mind of its own. Okay, it does everything purposely. Everything, and I'm just for a reason because it does do it everything purposely. Everything that it does is done purposely and algorithmically. Okay, this is not done by accident. This is not done by people. A little bit of it is done by people, but most of this is mostly algorithms. Okay, it's an institutional order flow. Okay, you don't even know what institutional order flow is. I said it earlier, but you truly don't know what it is. Okay, this all you can see how the market has a mind of its own. This is why I say you have to look into the lore behind pricing. Okay, you have to look at the background information, what's really going on. You can't just say, "Oh, break a market structure, go higher." You have to think forward. You have to think foresight. Okay, you know what foresight is? I'm gonna search it for you. Foresight. Okay, foresight is the ability to predict or the action of predicting what will happen or be needed in the future. Okay. So simply understanding what's going to happen in the future. Okay. Always have that foresight. Okay. Always have some sort of foresight or forethought. Okay. Always have that. You don't want to just be here in the present. Okay. I don't know what the word is, but there's a word that means basically always in the present and never thinking in the past or the future. Okay. You have to use the past when it comes to the charts. You use the past to predict the future. Okay. But some people, they use the past to predict the present. You know, that sounds weird. But when I say present, I mean like in the same day, okay? And what I mean by future is like looking at the next move. Like, for example, if you expect price to go higher, okay, right now in the present, like in the next 30 minutes, okay, let's say you're day trading during New York session. In the next 30 minutes at 9 o'clock, you expect price to go higher. What is going to happen after that? That's what I mean by future. Yeah, what is going to happen after that? Yeah, the present expected move is higher. But what's going to happen after that? Is it going to keep going higher? Is it going to retrace to go higher again? Or like just you have to think about that, okay? So if we really look, right, to confirm this down move, right, came into a premium, okay, like we said, we took out liquidity, then we came down after taking out this high also. I didn't even notice that, but we took out this high right along there, creating a liquidity purge, okay? And then we come down, creating a market structure shift, okay? Then we have that fair value gap right there. Price comes into the fair value gap, viciously drops lower. Okay, just completely like rips lower. See that? And it just completely goes lower. Okay, and then you have an order block right along here. You see that? I don't know if you see it, but it is right along here. This is your order. Okay? As you see, we came out of it, came right back in, and then dropped, and then dropped. Okay, that's what happened. Okay. Then, if you're looking around here, okay, let me mark this as order block so you know what this is. Order block. Okay. After this vicious move breaking away from this fair value gap, we had another fair value gap. We had a little miniature retracement, okay? Coming back into another fair value gap right along here. Okay, so we came right back into it. Do we want to push past it? Nope, because as we can clearly see, price comes into it, closes right below it. Okay. Do we come below? Do we drop from it? Do we reject off of it? I think so. Do you think so? I mean, I can clearly see with my two eyes that it came down. Some people might not think that. Some people might be like, "Oh, we're just coming down to go lower, guys. It's not showing low." Well, institutionally and algorithmically, actually, speaking of institutional, the word institutional, what was right here? there was an institutional sponsorship. Do you see it? See, right there? We got I, and then we displaced away from that home, going in the opposite direction. That's institutional sponsorship. Pretty cool, isn't it? As you can see, we trade. You want to see how many put up? We trade almost 10,000 points. Well, yeah, 10,000 points. Isn't that amazing? Pretty crazy, isn't it? And if you want to convert that to pips, that's 990 pips. Isn't that crazy? You want to see how long this happened? Remember, we're on the weekly chart. Okay? You want to see how long? From here, it took it about 122 days, or 112 days. Isn't that amazing? Very cool. We dropped 8%. We dropped 10,000 points for 8%. Isn't that amazing? But anyways, this is for behind price, okay? Basically, whenever you are doing your top-down analysis or your daily buys, you don't know what that is, so don't let yet. We'll be learning that in the next end of chapter lesson. But whenever you're looking for that, or looking for, or simply setting a prediction, whenever you're setting a prediction, it's you basically want to think in the future, okay? You want to just simply think, okay? I already explained what I mean by that. I'm not going to go over it again just to make your go berserk, but simply just understand why, okay? Understand why and when, okay? That's really all I'm going to say, okay? Like, when is it going to do it? Why is it doing it? That's it, okay? What, when, and why. Okay? Well, really, what, why, then when. Yeah, what, why, then when. That's what you should go off of. Is what, why, and then when. Okay, because what is basically like what price is coming to, or like what is happening. Then the why is it happening, and then the when is when the aftermath is going to happen. Such as the like when are we going to displace? Okay, so it's what is price coming to, or like what is price doing? Why is price doing it? And then when is price gonna, I guess you could say displace or distribute from that what they into, okay, or from that what that it did, okay. But anyways, enough of me yapping about what, why, when. And I'll be in this episode here. I'll see you guys in the next chapter lesson.